Okay, so what I want to do here is I want to talk about a little bit about the entry. I want to talk about runners. I mean, there's a lot of things that's hard in trading, okay? Not cutting your losers, etc. But the one thing that should be really, really easy is holding a runner. Okay. So I just want to start with that because this should be the simplest thing that you do. Okay. So if you can get into two contracts, okay, and you sell one of them for profit, then immediately the second one becomes your runner and you should have a stop loss. So if you buy two contracts, you sell one of them at 20% or 10% profit, whatever it is, it doesn't matter, not important. If you sell one of them at 20% profit, now immediately take the other runner and set it with a stop loss at minus 20%. Okay. Now this is only if it looks like we're trending. If it's chop, if it's a see money, take money, that's different. But in a day like today, where it's and yesterday and the day before and the day before and the day before, where we're clearly seeing trends, um, you should sell one. If you sell it 10% profit, the other one should be at minus 10% stop loss. Okay, so what does this mean? It means you cannot lose money. Okay, now if you want to make a little bit of money, if you sell one at 10%, then the other one you're gonna set a stop loss at minus 5% because you want to give it breathing room because um, they're gonna try and stop you out, and so the more space you give it, the better. Okay, now as it keeps going in, like I bought those contracts at 460. And then, now that it's at, 13 or 14, I'm not sure what it's at right now. Now I like to have the stop loss at, if it's at $13, I like to put it at $10 and then keep moving it up so that, if there's a sudden drop, I'm still locking in most of the profit. Any, any, I will, but absolutely. Yep. So any questions on runners? Because it's like that's like the simplest conversation, and I mean, it makes me sad when people don't hold runners when it's clearly we say, look, this is a strong move. The tools say it, everything says it. I don't really want anyone not to ever hold one runner. It's just this is what's going to fix your accounts. If you don't hold a runner, you're never going to recover and to become a professional trader. That's one thing, and it's really the easiest thing. I mean, it's very systematic. You don't simple math. Sell one at 20% profit, one at minus 20% stop loss. There's not a lot of thinking. It's really easy. So just do it. Okay, please. It's so important. And then sometimes you're gonna break even. Never let a green trade go red. Okay, so now before I'm going to talk about my entry, but I want to talk about the re-entry. So take a look at my screen. I promise you, I'm going to talk about that. I just want to make sure people don't FOMO and they think because if you chase any move, chances are you're going to get locked in. You're like, okay, I missed it, so I'm going to get in. I'm going to go bigger and better, and then that's when you basically overpay because you buy on a green candle. And even unlike this red candle, is this a good time to get in? Maybe, maybe. Okay. But if you want to be systematic and take all the emotions out, look at my screen. So this is our primary tool. So we have SPY at the top 2 minutes, we have VIX 2 minutes bottom left, VIX 1 minute bottom right. So the best entries I've noticed, if you're patient enough, let me say the safest entries if you missed the run in the first place, or if you want to add to your position, okay, is what you want to do is you want to wait for the 1 minute VIX to say, hey, things are turning. So it gives you a blue triangle where it pushes up. But then, guess what? So now you get a nice deep dip, Okay, but then it turns into a yellow triangle. So the 2 minute, the 2 minute, sorry, I switched my colors. So the 2 minutes is on blue and it stays there, okay, on VIX. And then the 1 minute gives you a yellow triangle where it says it's turning. 2 minutes stays on blue, but then the 1 minute turns back to blue again. So they go out of sync, and as soon as they go back into sync, that I've noticed gives you a very good dip to buy. So you'll see on SPY, you would come down quite a bit and then you'll start going up again. And that's when you have a strong day like today, that's your best entry for re-entry. So if you missed it, or if you want to add to your position, that's the most likely times to do that. Okay, so how did I get into this move? Well, so we had our bot send us a notification at 9:52 a.m. The first one for the day. SPY very bullish. So that was a little early for me. It's like, okay, it's like, I mean, so it's not at the open, so that's good. But I like, to wait a little bit longer. So we got that notification that SPY is bullish, which means that the 2 minute VIX is bearish, the 1 minute VIX is bearish. We have a yellow triangle. So this is on the chart. This is when I got the notification. Okay, so then we get a nice red candle, and I added one position, and then as soon as we broke um, through the pre-market high, that's when I added a second position. Okay, so I mean, if we're getting a strong move, I mean, you could just see it. Look at this. Look how VIX is below the red EMA clouds. Look how VIX is below the lower band. I mean, so any moves outside of these bands are strong moves. So when you have this strong move outside of this band, so when VIX has a strong move to the downside, that means we're having a strong move on SPY. And look at this. SPY goes out of this band, and now guess what? Now we have a strong move on SPY. As long as you stay outside of this band, it's green, it's a strong move. That's how it's not necessarily a trend because it could fall down, but the longer it stays outside of that range and the longer it stays green, the stronger the move. And when it keeps going, that becomes then a trend. And you can see 164 minutes trend on the 30-minute chart. So you can see now it's blue, so it's taking a breather, but I'm not getting in. I'm waiting for the 1 minute VIX to tell me when to get in. The other thing that I saw too at the same time is our new tool. And remember, I gave you guys a link to this so you can now open it up on your own system so I don't have to screen share it on my side. But this is the other thing I saw at the same time. I saw, okay, so let me just quickly go over how to read this again because not everyone made the training yesterday. So this is SPX 0 DTE only. So this is what we use to know what the market is doing and where it's being pushed by options, because options has a huge impact on where the price is going. Now, this doesn't mean you have to play 0 DTE. Okay, this is just telling us how the market moves. So you could play 1 DTE SPX, you could play SPY. Now, obviously, you could play, Qs and other things as well, but they're not as strongly correlated to this. This is telling us what's happening to SPY and SPX. And usually when they move, then we usually see other mega caps follow them. But, that's up to you to decide how to play that. So in the middle, we have the strike prices. So the middle, so the middle one here is like where your calls and puts are, about the same value. And then I have 10 entries before, 10 entries after. And then, so on the right-hand side, you can see these are the call prices. So it's saying that at this strike for 0 DTE, this call is going for $9.20. And these are all based on the last transaction. So these are not quotes. These are actually real prices that people paid. So the last transaction happened at that price. And from the open of today, it's up 170%. Okay. And it's updated every second for the entire trading day. And if any price goes up, we have a green background. If any price goes down, it's a red background. Then on the left-hand side, it's exactly the same thing for puts. So you see the real values here for calls and the real values for puts on the left-hand side. But you don't have to read that because that's just too much work, and we don't want to do that. So to make it easier, the price for the contract for calls, I have a blue line here, so it shows you. So you can see that the most expensive ones are at the top and going down, and then you almost have no value. 12 cents here at the bottom, and the same for puts. So these are the contract prices for puts going, you know, up here for the pink lines, and you can see the actual values by looking there. Then at the same time, the if you want to see the percentage gain, that's going to be the gray lines. So when you look at the gray lines, that's the percentage gain for today based on the open price on that contract. And then the small number you see there, that's the number of contracts. So basically the volume that has traded today. And if you're to the right, it's a positive. If you're to the left of that number, it's negative. And the bigger the number, the bigger the gain, 200%, on these guys, and then 63% on this. And then when it's negative, minus 76%. So
Hey
the
guys, this might
idea,
be a sort of a pullback here. Tesla's rejecting, ES is rejecting
let me just,
4,400, NQ's rejecting.
we'll just mute him a little bit. So basically, if, sure. No, that's for the whole day up to now. And up to now. So, and you can tell that because the number just keeps getting bigger. It never goes down. Okay. So that's for the entire day, that contract volume. So if you go to your options chain, that's what you're going to see. Okay. So now, so the idea is, I mean, so there's, when you look at how they price option contracts, there's a formula based on, the actual, SPX price, how much time is left, and, a bunch of other stuff where you can go and calculate it. But ultimately, the price is determined by people buying it. So if more people buy it, the price goes up. When less people buy it or they sell it, the price goes down. Okay. So if people decide, okay, we're moving up, they're going to start buying calls. They're going to sell puts. So based on this, so this morning when I got the notification from our bot saying, hey, it's time to get in to calls, and we broke above pre-market high, I also saw this nice round belly that's telling me that everyone's that making money in calls. If they make money in calls, they're going to hold on to it. They're going to buy more calls. And everyone with puts to the left, they're losing money. Because they're losing money, they're selling it. So this is telling me much better than options flow or anything else, where the market has been pushed to. Now, this tool is 2 days old. I made it yesterday. Yesterday, it did phenomenal. It gave us all the heads up we needed. So this is day 2. So, it's still a new baby, so it's still cute. So I don't know how well it's going to hold out in future, but, I've never seen anyone else do this. This is a brand new idea that I've never seen anywhere else. And I think this, I mean, it showed me immediately this morning. I could see a lot of chop because it was going back and forth. And then suddenly I saw calls building out. I got the notification, pre-market high. So I had all those confluences telling me this is a great time to get in. So that's why I got in. I basically, so you have a Telegram bot. So if you're not in front of your computer, you can have your phone with Telegram installed, and it's going to send you a notification. You can set up an alert for that so that it wakes you up, even if you sleep, if you wanted to. And then based on that, you can come back to the charts. You can see what our SPX or SPY watcher is doing. And if you see a bullish call by the bot and you see everyone making money on calls, that that's a good time to get in. But then also the very important the levels, guys. Like if you're like we're bouncing off right here, we're bouncing off the 48 EMA, we're above the pre-market high. I mean, there's no replacement for levels. Okay, so even with all these things, like the safer bet is we're above the pre-market high, we're outside of the green band. I mean, these are all things that's going to make your play safer. And then again, keep runners, buy two contracts, sell one for profit, even, whatever, and then put a stop loss, keep your runners. You're not going to have these big wins if you don't keep runners. And it's really the easiest thing to do if you just look at it mathematically. Did I answer your question, Vic? That's right. Sorry to interrupt you. Here's your re-entry. Remember what? And sorry for interrupting you, but I want to make sure I show you guys. So see the 1 minute yellow triangle and blue. So that's your re-entry signal that we're going to keep going higher, most likely. Sorry, back to you, Vic. Okay, so I don't want to keep you guys longer than what we need to. Any other questions before I let you go? Don't short this market. Don't fight this trend. Wait for the re-entries. Okay, be systematic. This is likely gonna be a trend day. So don't leave your keyboards. Don't make sure you keep your runners. I mean, watch the um. Let me just open up. Make sure you watch the internals. Let me just quickly open it up. Go ahead. Because last week we were super short, okay? And that's the thing. When people are offside and they're like, when everyone feels that the market should die, that's the market's job is to take away your money, okay? And if and when everyone's offside, that's when you get these squeezes. These are squeezes. These are not new buyers on higher time frames. These are not people with big pockets getting into it. If you look at the internals, that's not what it tells you. It is people getting squeezed because they believe the market has to die. Remember last week how bearish it was, how red it was? The, these are still those guys that were flushing out of the system. And so when you look at the internals, so again, you guys have this URL. You're going to open it up. It's shared, so you can watch it on your own system. Watch this side by side. You could see, ADD and Voldy. You could see with these dips, and when this color changed 1052, that's when you get back in. Okay, so now we're going back up again. Where this when this starts turning, it's taking a breather. Okay, so keep this open. These are the three tools you want. This chart, this one, and then that one. And you have links to all three of those. So you can watch all of these things without me. Okay, so you're looking for all the same things. Green candles means we're going up. If this goes up, then SPY goes up, generally goes up. So these things, the market internals, they move the same direction as the market. So when they move up, when you have green candles, when you're above the EMA clouds, um, that's good for the market. If you're above these lines, 1500, that's good. Above 2000, if it's above 2000, it's really good. Um, but So if you're above 1,000, it's bullish. Below minus 1,500, that's bearish. Now, I mean, you don't have to move the same as this. This is just an extra thing. So this shouldn't be, you shouldn't, like, if this is not agreeing with SPY, it's okay. It's not like if VIX and SPY move opposite, stay away. These things don't always line up, but when they do line up, it gives you extra confirmation. So, so you went down, you went up. So we have a nice red candle now, which could be another good entry to add to it. Because again, your internals, so there it's a low red, but I mean, these breathers are normal. This is why you don't chase, because there's always a red candle that's going to give you a way to get in. And then Valdi, same thing. If it's green, um, you see these things start over every day, so it's a little bit. So it looks like it's red, but it's only because, like, based on what it was yesterday, it started. Well, so I guess it is red, but I mean, it starts at the bottom and then it moves up slowly. So it's just you have these big jumps between the 2 days, and then you have the VIX. So you on the sorry the tick. So on the tick, you want to follow the yellow line because it keeps jumping up and down. So you want to follow the yellow line. If it's above zero, that's good. If it's above 600, it's great. If it's above 1,000, then it's like, okay, now we have an amazing trend day. I mean, look, this morning, at 10, we almost hit 1,000. So this is the yellow is just the moving average, but look, the blue line, that's the actual values that it jumped to, and then the yellow is just smoothing it out because it jumped so much. So you can see the internals are super strong. Um, this one is taking a breather, so a little bit of sideways here on ADD, but everything I see tells me that this could become a trend day today. So so that's a 2 minute SPY. Yes, that's right. Exactly. So exactly. So exactly. So I mean, so remember, okay. So yours the SPX 2 minutes. So you got the down, then now you're getting the up, and so this is a continuation. This is a trap. This is for bears saying, okay, it's turning, let's get in. These are this is the trap for people fighting the trend. So now we're taking their money. It's like thanks for playing. So this is why you have these wave patterns because you want to trap these guys fighting the trend, and that gives you more fuel to move up. Okay, so what you have to remember is, so right now we're staying outside of this upper band. Okay, so we touched a little bit, but I mean we're staying outside of it. As long as we stay outside of it convincingly, we're in a trend, and it could change at any time. So when a stock is strong, you're looking for it to behave strong. What does that mean? It means that dips are bought. Okay. So if dips are bought, then it's acting strong. If that stops happening, then it's not acting strong anymore. And the same on the opposite if you're going down. So it's bullish. As long as it acts bullish, you're going to buy the dips. Okay. So when you see a dip, whatever mechanism you use, you're like, okay, red candle, I think this red candle, this one, whichever one, you decide, okay, this is my dip, you're going to buy it, okay? And then when you get, and ideally, two contracts is always a good way to go. So you can buy one on a dip, and if it dips more, you can buy one more contract, but that's it. And then when it approaches the high of day again, you're going to lock in one of them so that again, it's all strategy. You lock one in for partial profits, and then the second one becomes your runner with a stop loss. And then if you get stopped out, it's okay. Then you just wait for the next step. Now, if it stops working, so you want to rinse and repeat the process. So you buy the dips, sell one of them as you approach the high of the day, and then keep the other one as a runner. And you keep doing that until it stops working. And the first time it stops working, you're done. You're done for the day. Um, or which, you can wait for another dip if you want, but usually it's like, okay, it's not acting strong anymore. So, I'm just gonna move on and do something else with my life. But, again, use these tools because if I look at this, we're still going up. Everyone's still making money on calls. Everyone's still losing money on puts. I look at the internals. Okay, so so I could see on the internals, we're taking a breather. There. And again, these things can move out of sync with SPY and SPX, but usually when you see them taking a little bit of breather, you could see SPY and SPX taking a little bit of a breather as well. But so this should be a loose guide. Uh, don't these things have faked me out more than not in the past. So I'm always a little bit cautious on it, but it's very strong, so that's good for the market. Now, if this suddenly starts dipping and you see big candles, then you should definitely lock in your profits and make sure green trade don't go red. But yeah, so this yellow candle said, get back in. So if you get back in, and, just know that they're going to try and stop you out. So you cannot, when you get in, you cannot have a stop loss that's too tight. It would be better if you do it based on levels. It's like, you could see the way I would stop out is I look at VIX. If VIX tells me to get out. I always say the trade is not over until VIX says it is. So the best time to decide that the trade is over is when VIX says so. And what VIX is saying right now, it's saying the trade is not over. We're going up. Okay. Does that answer your question, Vic? So yeah, so you can see here this it shows you VIX comma 2 and VIX comma 1. So it's got the so you make sure you use this one, this use by link, um, because I mean these are so the VIX charts are using the Icon candles. So if I turn that off, you'll see much more noise. Okay, um, I don't for VIX both of them, and on the market internals I use Icon as well. Those work way better for the strategy. So that's probably what you've got wrong. And then obviously, you know, you can watch SPX and ES at the same time because sometimes they give triangles where you don't see them on SPY. So you can do that as well. Uh, but I mean, the more noise you have, the more things you look at, the more you're going to end up missing things. So, again, if you look at I mean, because you guys asked me when's the re-entry? Very simple. You look at your VIX 1 minute. This is the re-entry right there. Okay. And then obviously you got in and then it dropped first, but now we're going up, so you should be able to um
Eva said SPY strong. Eva said SPY strong. Eva said SPY
There's
strong.
there's the but saying SPY is strong. But so, so that's why if you get in the re-entry, you know, you don't want to just buy on that green candle. So re-entry doesn't mean slap the button right now. It says, hey, let's look for a red candle. Let's look for a red candle to get in. So if you get your re-entry here, hopefully you're able to wait for this candle to close and then to get in. And then you would have had a great entry. If you got two positions right now, you should lock one of them in for partial profit and keep the other one as a runner. Any other questions? Did that help? Humble mind, did I answer some of your questions? Sure. Uh, they okay. So this is exactly what's in your options chain, and it is so remember every transaction has a buyer and a seller. Okay, so there's no such thing as a buy or a sell. Okay, now if I sell it and the market maker buys it, then usually we want to think of it, as a sell. Okay, because of the way we track things. But there's always a buyer and always a seller, and I hope you guys took that re-entry, and I hope you could get your runners because right now, all these tools are making you money. That contract that I bought at 460, it's now at $20. So if you bought here one SPX contract, you would have spent $4.60, and right now it's worth $20 or $2,000. One contract only. It was out of the money. It was, I got it. It was, it is 43.60, and we were 43.45 or six or something. So so it was about 13 or $14 out of the money. But I mean, so that's how you trade it. If you're very systematic, I mean, how many days have we seen this bot telling us when to get in and be right? Now, if it's within the first half an hour, you should be super careful. But I mean, this bot has been right most of the time. Okay. I mean, I'm not counting it, but I mean, you guys know this. I'm not making this up because you have all the same tools. Everyone should be making money. No one should be losing money. If you stick to the strategy we just discussed, and honestly, forget everything else. You know, Now if you're a successful trader, then do whatever you want. But I'm not wasting time on Tesla or Nvidia or any of these other guys because the problem is I get into them and then I lose the good SPY and SPX trades because I'm focused on the wrong thing. So I don't trade any of those things. So my recommendation is, unless you're a successful trader, stop looking at all these shiny objects. Stop trading them because it's super hard to get good at many things at the same time. So just focus on this basic strategy we just discussed, okay, and hone it. Get really good at it. And then if you want to do more things, go for it. But I think you're going to find that once you perfect this, you're not going to want to do anything else because your day is going to be so much simpler, and because right now, I got in at 460 down here. It was at $20. I'm not sure what it's right now, but you know, I sold one of my you know, I mean, I sold one, like I forgot where I saw. I sold one around here and then more up there. And now I'm just, you know, holding on to the runners and, you know, and I have stop losses, trailing stop losses. And it's like, okay, I cannot lose money on this trade anymore. Okay, so it's just gonna keep running. And you know, I don't have to worry about every little dip. Now, if VIX tells me the trade is over and the bot lets me know it's over, then I'm gonna lock in, you know, all of my runners and be done with it. So do yourself a favor. Exactly, you have to react and stick to just one strategy. I mean, this is it. The VIX-SPY strategy. Just stick to it. Look how good it works. We've seen it work over and over, and it happens so many times. And we've caught, you know, most of the moves, and then you use this new tool that was born yesterday, and you can see where the money is, who's making money, who's losing money, and then the internals will tell you too if there's a strong push or up or down. It's that. So these are the three charts I look at. You know, I mean, honestly, I don't look at anything else. I have bookmap open here on the side, so I can see when we approach big liquidity levels, and then I'll, you know, lock in some more profit. But it's not. I mean, these three things. This is all you need. You need this chart that you have the URL for, this one that you have direct access to, and then the internals. You know, that helps a lot too, just to, you know, see things move. But I mean, honestly, just do that. Forget everything else, and I think you're gonna do well. I mean, this has changed definitely my trading. Absolutely, absolutely. Because now, I mean, now I don't ask myself, is this is this bullish? Is this bearish? I mean, I have the bot that tells me, and I know exactly what to look for. Even if I don't have the bot, I know what to look for on the charts. Blue triangle, 2 minute, lines up with blue triangle there, lines up with yellow triangle. Um, you know, so I know what to look for, but I can now go and I have lunch outside, and I know the bot's gonna let me know when there's a move. I don't have to be a prisoner to my keyboard. You know what I'm saying? I mean, so I mean, it's like this is really an amazing setup, in my opinion. I mean, I'm super excited. That's why I'm trying to package it up and clean it up so we can, you know, start selling it. And you know, unfortunately, you only get more people participating if you charge the money for it. When it's free, no one's interested. They don't put in the time to learn it. They think, you know, if it was good, then it should cost money. So we'll just take their money. Why not? um, but I mean, honestly, you can you can just, I don't know that it has to take up so much space. I don't know. Good. Yeah, I mean, if you need an excuse, absolutely. I mean, and then I mean, but I mean, do you guys agree? Am I just making stuff up here? I mean, if you, I mean, you know, are you getting? I mean, ignoring when you don't follow the rules, but I mean, can you see what I'm saying? Do you see how these things just work? Yeah, look at this one, 900%. You know, it's like, and I mean, this tool is like, it's a game changer. I mean, it really is because like yesterday, I mean, I started off, and everyone was losing money, and then suddenly I saw calls making money. I'm like, okay, I'm there. Let's get this party started. Um, and I mean, and look at this. So this is so important. If you see if there's going to be a trend change, you're going to start seeing it. Now, obviously, this is based on percentage from the beginning of the day. So I mean, so if this starts changing, it's going to take a few minutes to get negative. Um, but this chart is very good at the beginning of a trend to show you where it's going. So if you like, okay, which way is the market going? You start here. This is the thing in the morning at 10 a.m. where you say, are we going up or down? This is where you start. So if the bot tells you to go down, but this tells you to go up, you're waiting. You're ignoring the bot because the bot's wrong, probably. Who knows? I don't know. But this in the morning, like this should be your primary weapon to determine where it's going. Okay. And then we have the other strategy. Okay. Um, so 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 it's not so the market makers are not trying to take your money. Okay. The market is taking your money. Okay. And that's a very important distinction. It's like the what we're doing here is we're playing it the same direction as the market makers. Okay. Um, but they're not. I mean, the thing is everything in trading is opposite the way we're raised. It's like your parents like, hey man, son, you gotta be proactive, otherwise you'll get nowhere in life. I mean, that's the worst advice you can give any trader. Don't be proactive. Now, should you study? Should you look at charts? Absolutely. Should you spend a lot of time reading charts during the day and afterwards to see what you missed, why you missed it, and everything else? Sure, but you know this is all about reacting, and these tools help us see where it's going because the market makers, they know this stuff. They know everyone's buying calls. They don't care. They make money either way. I mean, that's what you have to understand about the market makers. They do not lose money because they get paid to play that role. They provide liquidity because if I'm trying to sell a contract, and at this very instance, no one else is available to do that. Their job is, if it's 100 contracts or less, in stocks, their job is to buy that from me and holding onto it until someone else is ready to do that. So without market makers, there wouldn't be a market. There would be, I would buy. It's like no one wants to buy it right now. Then so it would just implode. It's like nothing would exist without them. So they bridge that gap in time so that there's liquidity, and they get paid for it. They get a transaction fee on everything, and they don't care what you're doing. They know you're going to do the wrong thing. They know you're going to fight the trend. They don't care. They make money either way. Um, so I don't. I think there's a lot of conspiracy theories about market makers. Personally, I don't think it's as bad as all the conspiracy theories, but it doesn't matter. Learn to play by their rules and make money with them. I mean, don't fight them. Don't fight the trend. Um, the more you understand about how it works, um, the more you're going to make money. And now we have the right tools. I mean, these tools have worked every day since we came up with this new strategy, and I don't see it changing. Um, we have the right tools. So now we just need discipline. Don't chase. We have a short list of rules. I mean, I'm going to redo. a lot of the presentations and everything else because it's way too complicated. Because, I was clueless. And, it's like, because so it's a range day until a trend is proven. Absolutely true. But, I don't waste my time trading, mean reversion because, I rather wait for a trend. And if I don't get a trend, then I just sit out. But, I rather make, you know, 10x, every day I trade and sit out on the days that, I'm not, that there's no trend. But I mean, we're getting so many trends, even if they don't last the entire day. We get so many of them because VIX is relatively high, and obviously it's going down a little bit now. But I mean, you should pick pick a strategy, wait for your setup. If it doesn't happen, you don't trade that day. Okay. If the bot doesn't tell me to get in, I don't get in. And watch the Mancini levels. That's the other thing that helps a lot. It's like, what's Mancini saying? Because he's a smart guy. I have the ES chart open with those levels, but then with the indicator we built, these lines, it's a Mancini level. So you put in the Mancini levels that I paste into the focus data, and then it modifies and translates the Mancini levels onto the SPY chart. So if you're using my link for this chart, you will also get the Mancini levels every day, unless I'm out, on this chart. So, so if it's red, that is a resistance level. If it's green, it's a support level. If it's white, it's target. If it's orange, it's a pivot level. And so these are the Mancini levels. So if it's on this chart, so when you see them, when you can see Mancini levels when you approach it, lock in some profit. You bounce off it, you go in. So there's the next Mancini level. All based on what he provides every day. And you don't have to think about it. You don't have to think how it translates to SPY. Our tools does it all for you. Other questions? Yeah, I mean, a lot of people use. Go ahead. Yeah, so I have the simplified. So on the auctions levels, I have the simplified checkbox. So if I uncheck it, I'll get those levels back, and so those are the default levels that I put up there. Um, but I know a lot of people complain that my indicators are too noisy, so I turn it off, and so that the charts are less cluttered. I mean, they have a lot of stuff on it, but I tell you, it helps me to stay on the right side of the trade. But yeah, so a lot of people use the 9 EMA very successfully. Um, I don't. I used it at some point as well. I don't. I mean, so everything I explained to you today is my strategy, and obviously I forgot about the levels. So this is the volumes. So this is the volume indicator I built in. So this is looking at the last 10 days, and it uses the average for the last 10 days of how much volume we traded at that time of day, and it does it separate for pre-market as well as market hours. So it will. So you can see if there's high volume um, pre-market. You can see if there's high volume during the day. So if it's at 1, so you can see you're on the right hand side. So if you're at 1, it's the same as the average volume over the last 10 days. And you can see we have very elevated volume today. So this is a nice squeeze, another indicator that we're likely, having a squeeze, going up. And so this helps me to know that, whether it's a good time to trade or not. Sorry, I probably cut you off there a little bit. Was there something else you wanted to add? Yep. Okay, so tight stop losses when you're is a good way to get stopped out. So when you're in a trend day, you have to your stops have to be wider, otherwise you're going to get stopped out. So that's why you need a good entry. Okay. And I mean, you can see we're staying outside of this green band. So if you get in and you have a tight stop, you're gonna get stopped out, and you're not. So don't play smaller, because if you play smaller, you can have a wider stop loss. The bigger you play, the tighter you need your stop. Otherwise, you're going to lose too much money. So that's why I don't recommend playing big. I rather say get in with maybe 2 contracts, sell one for profit, one as a runner, and then when you have another pullback, you get 2 more. Sell one as you approach the high of day, and then so now you have 2 runners because you got in twice, and then you keep doing it, so you buy another 2, and so now you have 3 runners, and that's how you make the big money. And then at some point, now you have so much profit that I mean, you can afford a little bit wider stop losses, but don't make them too tight when you have a trend day. On a trend day, um, it's more important to get good entries, because when you have good entries, you're going to be able to join the trend. And there's again, here on the VIX 1 minute, here you can see here's the spot for the re-entry. Okay, so we missed it because I was talking, but here at 11:23, right there at the top chart, it says re-entry. So you wait, you get in. I mean, until so every dip is being bought. Until that changes, we're in a trend day, and it will probably go on for the rest of today. So don't fight it. But when people stop buying the dips, um, and VIX will tell you it's all over. You'll get you'll get all the bot will tell you, and then you lock in all your profits. But if you can get in early, so when you catch it down here, like we did this morning, now it's like you're so deep in the money. You don't. I mean, you're yeah. I mean, it's not even a problem. That's why you have to get good entries, and you have to hold. You cannot sell all your contracts, because now you sell all your contracts. Now you FOMO all day. Okay, where do I get in? Where do I get in? Where do I get in? I mean, you should be in all day because you got in early. And until VIX tells you it's over, you should have runners. Any other questions? Can you give me a day? Can you give me a day in August that was choppy? Yeah, go look at the chart. Give me a day that was choppy. Let's go look at it if you want. I mean, I tell you, this indicator has steered me right on most choppy days. Okay, so trust the process. It's above it's above the green EMA clouds. Use the tools. If you find a day where it's not working, I mean, just ask. I mean, is this a choppy day? Is this a trend day? I mean, because you have to learn how to read it, because it stays outside of the green band. You see the market internals. I mean, look how strong they are, and look how they keep going up. I mean, these are things telling me that we're in a trend and we will probably trend all day long until it changes. Okay. And so, but I wouldn't expect a trend change until 1 or 2 o'clock or so. I mean, I don't know. Um, Nothing's guaranteed in life, but everything I'm seeing tells me that we're in a trend day. So you should be buying the dips. You should and just keep it small, because you only buy. So when you see a red candle, you can buy one. If you see more, you can buy one more, but no more than two. When you approach the high of day at that time, you're going to lock in profits on one of them. You're going to set a stop loss on the second one. That is, so if you have 20% profit, the stop loss goes to -20, and then you just write it out. And then as you're more into the money, you move up your trailing stop loss. And I mean, you could see, and obviously it's easy in retrospect, you could see that it worked every time today. But you have to practice reading the charts. If you cannot do it after the fact, you're not going to be able to do it during the fact. Okay, so you have to practice both. And at the end of the day, you have to look at the charts and say, why did I miss something? Why didn't I see it? And then you have to get better at it. And when you look at Tesla and Nvidia and this and that, I promise you will miss this. Okay, so that's why I only look at this chart, because until I stopped looking at all of the other pretty girls, I missed all these moves. And then I realized that these shiny objects are there just to make you fail. Okay. So yeah, Alice, so these charts are read only, because that's the only way you can share it. So in TradingView, if you share, so you go to your setup here, and then you go and you say sharing, and it's always read only. That's not by choice. So I don't stop you from doing it. What's nice about it is every day when I update these levels, um, the Mancini levels, you get it. So you just have to always keep that link open. The Mancini levels will automatically update, so you don't have to think about it. So it's always the same place to go. And there's, you know, um, these are just, so I could quickly, I mean, so you could try and recreate these if you want. Um, I don't see why you want to recreate it. Most people will recreate it so they can throw other crap onto it and get more distracted. I think that's a bad idea, but if you like bad ideas in your life, um, here it is: trend trader, Mancini levels, auction levels. And the only thing that has a special setting on it is auction levels, and it's at the very bottom, simplified. That's it. Um, then the same year on the VIX charts, it's trend trader auction levels. And again, the only thing that's different, simplified, both of them. And then we have Heiken Ashi on these bottom two. That's it. So it's standard stuff. And then this is my cumulative volume indicator. And then here, this guy is just basically, I took like a new chart and I set it up to remove all of the bars. And then this is just my mega space with just the standard indicators on it. And then the only other thing is up here, when you click on that, I sync the crosshair, the time, and the date range. So that way, if I go here and I zoom in or out, the other charts will follow. But that's everything. So with all that information, you should be able to recreate it on your own. And then obviously extended trading hours, make sure that's on as well. So so trader 17 is the VIX 2-minute yellow candle signal to get out on the bullish day. Um, Sometimes, I mean, that's a good question. So sometimes if the VIX, so if this one gives you a yellow triangle, um, I would I would usually lock in most of my profits because if the 2-minute VIX tells you there's a trend change, it I mean, you could keep one runner if you wanted to, but that's usually that says trend change, especially if it's combined with a blue triangle on SPY. That's usually a good time to get out and then get back in if it changes again. So yeah, I mean, if I see a trend change on the VIX 2 minutes, I get out, I lock in my profits, move on, um, and then because many times I've seen that then it might go in the opposite direction for a little bit, and my recommendation is not to play against the trend at that point, but to just wait until you get a better entry to resume the trend up. Now, if you suddenly start seeing long candles on VIX, that's that's a trend change. You jump in on the trend change. So if you suddenly see this little blue this candle down here, if it suddenly goes all the way to 17 and you see it like these long candles in the opposite direction, then the trend is over. We're going the other way. I mean, that's in my experience from what I've seen. So if you see these big ass candles, then I jump in going the opposite direction. So that's usually you see it after 2 p.m. sometimes, but that's a good time to know that we're moving the other direction. And I'm expecting that the new I should just call this the Spy Watcher, even though it's SPX, because they're the same thing and it's a cute name. And I'm sure this will tell you that too. So hopefully I answer your question. Okay, that's right. If I change it and I save it, so in theory, let's do this quick test. So I'm gonna go here to SPX, okay, and then as soon as I hit save, I suspect it will update on your side. Does it change to SPX on your side? That's right. So yeah, I keep it on SPY, um, because because SPY is pre-market and SPX does not. Um, but I mean, so we went through everything to recreate it. So feel free to recreate it on your side, and then you will be able to change it. Because I talked through everything that's on here. I mean, it's unfortunately I don't have a choice with TradingView. They don't give you an option to share it any other way. Um, but yeah, I mean, so SPX works fine too, um, but it doesn't have pre-market. So I like that. I mean, and they're both good. Sometimes I get signals on SPX that I don't get on SPY and vice versa. So yeah, it's not a bad idea to watch both. I only watch one because I really try to reduce the amount of noise. And the more noise, the more things I look at, the more things I miss. Okay. So I find I do better if I look at less things. And so I listen to the bot, and I have Discord read anything that the bot says. Um, and then, I look at this chart and now this chart, and then I have a separate monitor where the internals are up right next to me on the floor. So if there's, and all I really look for if there's sudden changes, like if it's suddenly let's go look at like some other days. But you'll see some days like when this happens. I mean, so when there's these big moves in the internals, usually they impact um, SPY. So I basically just watch for big moves and then make sure big changes because that usually impacts SPY as well. But other than that, I don't spend a lot of time on the internals. I just use it as a warning if there's a sudden change in direction. But I mean, look at this. So again, you guys should assume at this point it's a trend up day until it stops, and you should be buying the dips. Two contracts, sell one at the high of day, and then keep one runner, and you're gonna keep other runners, stop loss, and at some point it's gonna stop working. But you would have already locked in so much profit. But it's really important to know how to join a trend day, and it's something you have to practice because you cannot just fight the trend. You cannot just sit on the sidelines for the whole day. You have to learn how to do it. Okay. And we still have high volume. We're still at double the amount of volume for this time of day. Other questions? Um, so, so you don't see these white lines? Do you see the Mancini indicator in the list? So I don't. Okay, so you don't. So are you able to click on the gear and look at the settings? Ah. I don't know. I mean I don't know how TradingView is done it, and I only have one TradingView account, so I don't really know what limitations they put on it. So I'll spend some time with maybe Vic or someone, and just so I can see exactly how it works. But it works the way they want it to work. So if it doesn't show that and you want to use the Mancini levels, then obviously you recreate it on your site, and then you're gonna have to click on the Mancini gear, and you're gonna have to put in the levels that I put in Discord in the mornings, and then you'll have it as well. So yeah, I don't know how it works. What's that? Yeah, so every morning if you go to so if you go to Discord, open Discord. I mean that, and I go to. So if you go to focus data and you go up, so see here is. So I subscribe to Mancini. He's got on Substack. He has, he posts way more details and he explains much more of what he does. It's $23 a month. I think it's totally worth it. You learn a lot from him. A trade pre-trade in the morning. They talk a lot about levels. Totally worth it. If you can start listening to them at 8:20 or so, they're $5 a month on YouTube. Totally worth it. But so what I do is I look at these levels and then I convert it to this string. So you take this thing, you copy it, then you go to um, the to your chart, you click on the Mancini gear, you go here, you select all, so you can delete that, and then you paste a new thing in there, and you say okay, and it will know that you're on SPY, so it will translate it.
Eva said SPY strong. Eva said SPY strong.
And if you then go to SPX, it will put those lines back there because it knows it's SPX, so it knows how to do the math to translate the ES levels to SPY and SPX. Other questions? But again, my recommendation, and again, it's not financial advice, pick a strategy. If you don't like mine, I don't care. Pick something else. Pick a strategy. One strategy, as simple as possible. Focus on it, learn it, practice it. Stop trying to play 1,000 things. Ripster is an amazing guy. Don't let him distract you, okay? Because it's so easy. He's like, oh, meta is strong, and I'm like, okay, then I get into it, and then 2 seconds later they drop, and it's not his fault because when he said it, it was true, and then 2 seconds later it's not true. Um, so I don't listen to these other guys anymore. I've lost too much money. I mean, I listen to Ripster to learn his because our strategy is basically based on what it is. It's the EMA clouds. It's a big strategy, but we took it to the next level with the tools because we're looking at it on the 1 and 2 minute charts. He doesn't look at it. I mean, so it's like we took a lot of his ideas and we added to it. Um, so I listened to him to learn from him because he's got way more experience than I do. But I also don't listen to him when he says, "Hey, something's strong or weak," because especially the first half an hour because it changes so quickly. So and then I end up buying the wrong thing. I'm staying in it. I'm trying to get my money back. Then I miss all these great trades on SPY and SPX. So pick a strategy, focus on it, and get good at it. And this one works for me. I'm not doing anything else. I mean, this is the strategy for the rest of my life. I'm just trading SPX, and I'm gonna get better at it. And I'm sure it will improve over time. Um, but focus. Turn off the noise. Stop listening to other people. You have to learn how to do it yourself. Don't wait for me to tell you to get in. Listen to the bot. Go look at the charts. You know what to look for. I'm giving you all my secrets. I know it sounds so funny, but I mean, everything that I know. There's nothing that I haven't told you. I've shared everything with you. I mean, you have every link, everything I'm looking at. You don't have the source code for these things, but otherwise you would literally have everything. So you should be able to take these trades without me and even do a better job than me. Any other questions? Okay. Well, I appreciate your time. I think this was actually a very good training session. So I will again post it on YouTube.